Good morning and welcome to everyone joining us for the next 60 minutes when we'll be looking at how fintechs fuel growth and specifically how specialist versus generalist payment providers support fintechs with outsourcing and partnerships. Last week, we learned that the UK's tech sector saw the creation of 20 unicorn companies in the first half of 2021. And to put that into context, it took the UK 24 years to get its first 20. We also learnt about futurecorns, of which there are 153 possible candidates in the UK, with the potential to become unicorns within, I think, the next 18 months. And it's fintech that continues to dominate the majority of investment rounds. Of those 20 companies that became unicorns this year, 11 were fintechs. So as the government sets out its pro-tech agenda, we wanted to take a look at how fintechs are fueling growth and how, as the sector matures, collaboration has become the new competition. So we're going to look specifically at how fintechs of every size, large and small, are increasingly looking to partners, to third parties, to get them to market faster, to launch new products and services, and crucially, to deliver a better user experience. So before I introduce our speakers, please feel free to use the chat function at any time throughout the next hour to ask any questions, and we would love to know where you're all from as well. So it gives me great pleasure to introduce you to our trio of fintech experts. So Luke Guerian, Chief Commercial Officer at Morewand, Warren Russell, co-founder and CEO of W2 Global Data, and last but not least, Hugh Davies, co-founder of Ozone API. If I could ask each of you to introduce yourselves and your organisation's role in helping fintechs fuel growth. Luke, would you like to kick us off?
Sure, thanks, Diane. You've already said sort of my name and role with Morewand. I guess with some context as to what Morewand does. We're a B2B payment service provider. I guess sort of to best describe what we do, we work with fintechs with a very specific part of I guess the issuing value chain, which has been sponsorship. We also have another offering, which is digital banking, which I guess is agency banking that can be taken up on a standalone basis. I think over the past sort of 8 or 9 years, I've worked for different fin sponsors of different shapes and sizes, and I guess worked with a lot of the fintech. So the report's sort of a topic very close to my heart. I'll come back to it later and hand over to Warren and Hugh to introduce themselves.
Thank you very much, Luke. Hugh, would you like to go next?
Yeah, sure. Thanks, Dan. Hi everyone. I'm Hugh Davis. I'm one of the founding team at Ozone API. I've been in banking and payments for many years, but this open banking space for the last 4 or 5 years. And at Ozone, I guess we're in the very sort of specialist camp within this conversation. So we've built a technology solution to help banks and financial institutions implement their open APIs so they can deliver really high-performing, standards-compliant APIs to comply with things like open banking or to provide great interfaces for their partners to use. And we're working with many banks around the world to help this drive towards open banking. So great to be here today. Thank you for the invite.
No, it's great to have you with us. And last but not least, Warren.
Thanks, Diane. And thanks for the invite, Luke. We've been at W2, we're a RegTech platform that powers fintechs. So we enable access to KYC, AML, anti-fraud services on a global scale, and we really fall into the specialist category as well, which I'm sure we'll touch on a little bit more later. But yeah, I've been in and around the financial services sector for the last 10 years plus at W2, and probably another 10 years before that as well.
Great, thank you, Warren. So just to set the scene, we're seeing record fintech growth, and I would like to start by firstly looking at how fintechs are getting off the starting block and equipping themselves for that growth. I mentioned earlier collaboration being the new competition. Luke, Morewand recently commissioned a report that looked at how and why fintechs are increasingly looking to third parties. How did Morewand's experience as a BIN sponsor lead to the report?
Yeah, I mean, as I touched on before, I guess sort of the fact that we work as a BIN sponsor means that we fall in the kind of specialist camp in the fact that a fintech starting out looking to add a sort of card offering or a digital banking offering, I guess is presented with a variety of options where they could sort of be taking a plug and play sort of end-to-end solution. They could be sort of electing to use a BIN sponsor, contract with processor, contract with all of the value chain, which in reality is sort of actually quite an expensive and quite a sort of laborious process to do, which isn't really sort of a very good sales pitch. But because I've worked in this space for 8 years and I've never really had a clear view on who should be working directly with the full value chain and who should maybe sort of go for an easier sort of plug and play sort of end-to-end offering. It sort of was a topic very close to my heart because we never want to crowbar sort of somebody into sort of using us directly, and it's just going to lead to failure. So the report was really to try and get some substance and some I guess more insight into what would be right for what type of organization, what the merits of each scenario would be. And I maintain that it's absolutely horses for courses. I mean, there probably are some considerations that some fintechs would have around perhaps sort of economies of scale. There's maybe a break-even point where economically it makes more sense to up to a certain value or number of customers to work with an end-to-end provider, and then maybe it becomes more economical to contract with a full value chain. But there's probably a few sort of more tangible areas, but the report really focused on trying to understand how it sits in the wider ecosystem. Not wanting to sort of do a monologue, and Hugh and Warren, I'm sure, have far more interesting things to say, but I mean, to the point of, I guess, fintechs and the growth of fintechs and sort of the interest of the investors of working with fintechs. And something that came through in the report really is the pace of innovation, new functionality, the more recent announcements about sort of buy now, pay later sort of being introduced by Revolut, Monzo, etc. The sort of introductions of mobile wallets and all these different sort of, I guess, value adds, loyalty platforms, everything that sort of seems to be, I guess, ticking a lot of boxes for the investors to say each fintech has a very broad spectrum of functionality. It does everything in one place. Has kind of led to, I guess, a natural sort of progression of the market to sort of almost force fintechs into collaboration and picking out sort of best in market of everything that they can pull into one package for their end users.
And as it says on the screen here, you refer to specialists and generalists. How do you define them? And you know, are fintechs likely to use one over the other, or is it a combination?
Sorry, is that to me?
That's Luke, sorry, yes.
Yeah, so it's, yeah, I mean, we've defined it in the report, sort of saying that a generalist would sort of tend to have lots of components to their offering and bundle them together in one place. I think everyone on this panel sort of falls more into the specialist camp on the basis that we couldn't offer our services on a standalone basis in many scenarios. We'd always be, I guess, part of the wider value chain for our clients. So I guess that's where sort of maybe to the point earlier where a lot of end-to-end providers have really sort of pulled together what they think is best in market for what they anticipate as the user case that a segment of the market may want. But I think the reality is that it's impossible to do for everyone. It's somehow you sort of you pick a fantastic loyalty platform. It works well for a certain demographic or a certain geography or whatever it be. But actually, if you start looking at different country markets, you're actually going to have to find another loyalty provider. If you talk about so KYC, I'll definitely sort of maybe tee up Warren, sort of give a pitch about sort of on the geographical point, sort of the geographical sort of specialisms of KYC providers. I mean, it's such a niche area that it would be very difficult to find sort of a catch-all sort of offering. So owning that full value chain, I guess, gives the fintech the flexibility to be more dynamic, react to sort of new things they want to introduce, have the right tech stack to be able to sort of adapt and introduce new features versus sort of generalists who would, for the most part, and this is me being very diplomatic with my Swiss roots, for the most part, sort of have very strong sort of offerings, but there will at times for a lot of fintechs, I guess, sort of be a point of limitation and where sort of it would possibly inhibit them in introducing features, functionality, new byproducts, really.
Yep. Great.
Maybe to Warren.
Yeah, I think, you know, we've probably, you know, I've very much put ourselves in the specialist category at the beginning, but just sitting here thinking about it, we've probably almost got a foot in each camp. We're a specialist generalist. So, you know, the thing with, as you mentioned, you know, with KYC and verifications and AML regulations, you know, all around Europe and around the world, they're very different from place to place. So we specialize in providing access to a plethora of verification. So we you know, our technology is specialist technology to seamlessly pull together different verification methods. Our partners and all the end sort of verification providers themselves are specialists themselves in what they do. But what, you know, I think what is clear is that there's a delicate balance between the number of specialists that you can feasibly work with. So I think the you know, one of the big factors that came out of the report from my perspective and just sort of dwelling on it over the last few weeks, you know, in prepping for this, is it's about choosing the right partners rather than necessarily putting yourself in a particular bucket. I was quite surprised that the number of the ratio of firms outsourcing was higher for the older businesses. I thought in the, you know, the way of the world, and, you know, everybody gets everybody else to do stuff now, I would have thought, I was expecting it to tell me that the younger businesses were far more accepting of outsourcing stuff. So that was a little bit of a surprise for me, particularly with, I think, something like 35% of younger businesses saying they just wouldn't outsource at all. And that was surprising. I thought the bigger you got, the more likely you were to bring it in because you had the resource to cater for it. But the you know, the whole specialist versus generalist, I think it is important that you use the right people for the solutions that you're looking for. You know, we'll circle back around on that, no doubt, later. But
yeah. Okay.
Well, Warren, just actually your point there about the more mature businesses versus the less mature businesses. Do you think there could be a little bit of ego in there? And I mean that kind of in a polite way rather than an impolite way, but I mean, many fintechs start with a really strong technical competence. So for me, I think there's always a couple of questions that you'd be asking. One is, could we do this ourselves? Which is kind of the ego piece. Is this a technical challenge we can accomplish ourselves? There's a second question, should we do this ourselves? Which is then much more about the smarts of, okay, we have scarce technical resource. Where is the best place for us to deploy it? What is our sweet spot that we really want to focus? How fast do we want to move? How specialist and complex is this area? Would it be a challenge for us to learn ourselves? But I mean, do we think in the younger businesses, maybe sometimes ego plays out a little bit more, and the starting instinct is we're really smart, we could do all of this ourselves. And over time, actually, you realize probably the smartest route is to focus your core development resource, which is scarce, and your budget on the things that are really core and critical to you differentiating and you growing as a business, rather than trying to do everything. I mean, what do you guys think?
I would wholeheartedly agree with that, and I've spent the last 10 years trying to rectify the mistakes I made in the first 6 months. So, you know, when I set W2 up, and I'm sure other people are the same, yeah, we're going to take on the world, we're going to do everything, we're going to, anything a customer wants, we're going to deliver it. And I suppose in the last 12 months, we've kind of shifted our whole ethos to actually let's do less better, and I think that does come with experience, and I think you're probably right. You know, my ego is probably no smaller than it was 10 years ago, but the way I use it has certainly changed. Yeah, I think that probably does play a part. I think that's a very good and valid point.
Yeah, definitely agree, Hugh, on that point. And I guess the other sort of considerations really when looking at them, when I look at it from, I guess, our clients' perspective, and not just more ones, but I think kind of clients from my Wirecard days where I worked for their BIN sponsorship division in the UK. So when I look at sort of, I guess, where we sit and the types of clients that we service as BIN sponsors, I think kind of there's probably other explanations around sort of why more mature businesses outsource more, in the fact that it does somehow for a lot of fintech seem to be an evolution that they may sort of Monzo or Pocket or Revolut, a lot of these sort of fintechs have started out by, I guess, using a provider and trying to use as much as they can off that one provider, and gradually they've started to sort of take more and more sort of components away to then use specialists, and then they've sort of introduced more and more functionality where they've had to sort of have more outsourcing partners. So I think naturally sort of that evolution means that statistically there will somehow inevitably be outsourcing more and more on the basis that it's more costly to have lots of little suppliers rather than one bundled package. It's kind of all the functionality, sort of maybe some examples very specific to sort of, I guess, card programs and payments. I mean, you know, obviously introducing different load channels for products, sort of open banking, sort of functionality, mobile wallets, I guess, sort of things that wouldn't necessarily be there early stage in the MVP and gradually sort of are introduced to enhance the offering. Somehow means that, yeah, I guess if you took an MVP product, there'd be a lot less components to it, and I guess more and more providers somehow come into the mix, and there's statistically more being outsourced, I suppose.
Great, thank you. I want to dig a little bit deeper into some of those topics. But before we do that, when I was preparing my notes for this webinar, I wanted to comment on the evolution of the fintech, because somebody said to me last year that fintech didn't exist 10 years ago, which apparently is not true. It dates back apparently to 1866, which was the laying of the first transatlantic cable, which apparently was fintech 1.0. We're now in fintech 3.0, and I think some markets, Asia in particular, in 3.5. So before we go back to the topic in hand, I'd like to ask each of you, perhaps beginning with you, Hugh, how has the industry changed since your very first day in the industry?
That's a great question. I remember now turning up on the my first day on the graduate program at Barclaycard many years ago, and yeah, kind of seeing all of the folks in their white coats in the card production areas, and actually it was pretty. It was obviously heavily dominated around bits of paper and bits of plastic, and going through then the early stages of my career and working on a great opportunity actually to work with many years ago with Sky, and we were working on how you could manage your account through your set-top box. There's some really cool stuff, but yeah, I mean, we've obviously seen a shift to using digital channels to interact with the financial services provider, but it's still been a direct relationship between the financial services provider and the customer. I think where we're at now is a very different stage where, and this really comes from businesses like Amazon really showing what can be achieved by leveraging things like strong technical interfaces so that you can build a product and it can be consumed and exposed anywhere. I mean, Google Maps is a great example, right? Yeah. So, I mean, Google Maps was a fantastic piece of functionality, but it's being made accessible via APIs, and now it's embedded in so many different products and services that Google would never have come up with on their own, whether it's the running apps or the delivery apps or the I don't know, there was even one where you can send a zombie attack to your home or someone else's on Google Earth images. It's created so much opportunity for a core product to be embedded in loads of different experiences, and I think that's the point we're at. So yep. The industry is now changing, so it isn't necessarily about that relationship between the financial services provider and the customer or consumer. There's the opportunity for a much more sophisticated value chain, so that core product can be yep. embedded in so many different places, so many different ways, and it's really exciting. I mean, it needs to be done well and properly, and there's some, again, the subject of this conversation, there's some complex areas which need real specialist capability. That's kind of why we exist, but yeah, so exciting for what it could mean to the industry, just unleashing the creativity of multiple industries around how you can use payments and financial services in different ways. Yep. It'll fuel so much more than if it's a bunch of people really smart people in headquarters in different financial services companies. Mm-hmm. Of course, they're not going to think of as many things as a combined set of industries could. So yeah, I think it's a very different space than it was, 25 years ago when I turned up for my first day looking all green and nervous.
Luke, how was it for you from your first day to now?
Yeah, I mean, I guess sort of we're talking about sort of just under 10 years, and it's always been in payments, and it's always been sort of focused around cards. And the main thing that really sort of struck me, I guess, in that time is that, I mean, first of all, I guess sort of although sort of fintech's been around for a very long time, thanks to the information shared there, the term fintech was never really sort of used, and it's certainly become a lot more sort of mainstream, a lot more trendy, and obviously the VC interest and everything else. So that's certainly one evolution. I think kind of the products themselves have become so more sort of mass market, particularly in payments. Kind of broader examples certainly apply, and the survey, the report sort of was looking at a broader spectrum of services, but certainly in terms of payments, I guess, where sort of, you know, most of your neighbors, friends, family will be using sort of a fintech product now, sort of whether it be just for holidays or whether it be for investing in Bitcoin, whatever it is, there's sort of so many more people that are exposed to it, that are familiar with it somehow. I guess in specifically in terms of payments as well, I've definitely seen a sort of lot more maturity in what, I mean, I don't want to sound sort of derogatory, but I mean, it did feel like the Wild West sort of 9-10 years ago, sort of from a regulation point of view. It was sort of this, and I mean, by naturally it would be really, because really most of the payment products were built around sort of gift cards or very low value things, whereas now sort of, I guess a lot of the e-money products out there and payment products are sort of merging with banking products and have all the functionality and all the AML risk and everything else that goes with it. So as a consequence, sort of regulation is sort of caught up. So it's certainly a lot more sort of robust and solid and sort of structured as an industry, and obviously attracting sort of people from banking who probably sort of, to be honest, probably turned their noses at sort of fintech in the sort of earlier days. And then maybe one more point worth sort of adding that I've really kind of seen, certainly over the past 3 or 4 years, I guess, is the pace of innovation, really. It felt like there was several years where it was really, very exciting features sort of gradually sort of being rolled out, sort of freeze and unfreeze card that I think kind of NatWest and Barclays have been doing TV adverts in the past 2 years about. But so obviously that was kind of the benchmark sort of 4 or 5 years ago. To transaction notifications in real time and all these kinds of things, where if you look at just the past year, I guess the pace of new features and functionality introduced into a lot of the payment products, it's just lightning speed, really. And it's not sort of, everyone seems to be very fast paced as well. And this maybe is sort of linked to the topic of using specialists and the fact that, okay, PSD2 sort of was on the horizon for a while and everyone was trying to figure out how they could leverage open banking. And maybe that's sort of a slightly unusual dynamic, but okay, again, buy now, pay later, for example, sort of how quickly so many people have been sort of racing to come to the market, sort of where it's, I guess there was a couple of years where it was sort of there, but as soon as the uptake was there, sort of really just a flood of people ready to pounce on it and introduce it.
Sure. And Warren, it must have been an incredible journey for you, innovation, regulation.
Yeah, I mean, certainly probably one of the biggest changes has been just the sheer scale and I suppose ultimately the accessibility of everything. When I set W2 up, there was one other platform provider of that we do, and we launched kind of within a month of each other. A couple of years ago, I was at Money 2020 and I chose to stand in one place in the hall and look round, and I could say, I think it was something like 65, 66 different vendors of what we do. And you just go, and a little bit going back to what Hugh said earlier, the question of can we do it? If you've got a laptop and you can write a bit of code, then yeah, you probably can. There's not a lot that tech can't solve. But that sort of that change of and shift of pace is probably one of the biggest things I've sort of seen over the last few years. There's which is great. The UK and the fintech sector, embraces startups. We love an underdog. We want everyone to succeed. But it's just sustaining that pace of growth. But that's part of why we all do it, isn't it? Just
Well, she's still got the energy, right?
And a full head of hair. Oh, hang on.
Okay, so going back to the topic in hand, how do fintechs fuel growth? And I want to look a bit more closely at why fintechs are outsourcing and why those partnerships are key to fintech success. So Hugh, perhaps you can start off this discussion thinking about, is collaboration the new competition when it comes to navigating what is an increasingly complex set of rules and regulations today?
I think it has to be. Back to the point earlier, it's really hard to try and do everything yourself and do it well. Again, kind of, you go through your career, in your early stages of your career, you're always kind of focusing on what are my development areas I need to focus on. The later you get, you realize these are the things that I'm really good at. I need to focus on continuing to be really good at them. And I think it's the same in business. So particularly if you're coming into an industry and you're wanting to make an impact, you've got to be really clear, what is your kind of core differentiator, the thing that you're going to focus on and do better than anyone else. And your resource, you need to focus around that. So trying to be the best at everything is really hard, but there's also so much pressure to move fast. And whether you're funded by VCs or you're kind of bootstrapping and self-funding, if you don't have an impact quick, it's really hard to survive and kind of break through and become significant and meaningful. And again, trying to build it all yourself is going to slow you down. So working with partners that can help you accelerate because they've got pre-built capabilities and expertise. So I think it kind of gets you there quicker. But then, as you say, this is a complex industry. There are so many complex requirements and regulations. I mean, our focus is trying to remove all of the complexity from delivering these compliant open APIs. So financial institutions can comply with PSD2, and that is a very, very specialist area that's kind of hard to learn. We help. I mean, my founding team wrote the standards, so we kind of know the space better than anyone else. But there are lots of areas where there's complex specialism and regulatory requirements, and trying to master it all yourself takes time, takes a lot of resource, which creates a lot of cost pressure, and all those things are really hard. If you're looking to make a quick impact in an industry, probably at a point before you've got an enormous organization behind you, you need to focus really well and do a few things better than anyone else. And I just think it's impossible to do that, trying to do it all yourself. So partnering has to be core to any successful sort of rapid growth strategy.
Okay, great. We were talking about getting off that starting block, but when we think about scale, how are these partnerships, Luke, to you particularly, helping businesses grow and scale?
Yeah, so I mean, obviously the report itself was sort of trying to I guess, flush out from the respondents to the survey sort of what the reasons for outsourcing were, and it really came down to three headlines really. I think kind of on the one hand, there was very much to use points, sort of 45% sort of said it was because they were unable to handle sort of functionality in-house. I guess within that, sort of, that's probably sort of companies that in theory could do it, but sort of it would just be too much of a distraction, too much of an overkill. 45% sort of also sort of responded, say it would be a lot sort of better user experience if they used a specialist sort of outsourced provider than if they tried to sort of figure it out themselves. And I guess that's very similar to sort of, I guess, sort of W2 sort of services and ozone services, really, in the fact that, you know, companies, even if they could handle it in-house, it probably wouldn't be as good as the specialist that's just doing that very, very well and has it sort of tried and tested and keeping it updated to sort of be cutting edge at all times. And then the other 43%, another 43% also sort of referred to the fact that it gave a lot quicker speed to market was the main driver, really, that sure sort of a lot of companies could sort of do what all of us do, really, but it might take them a very long time to do that, and economically sort of it's made sense. I mean, interestingly, on the sort of listening to Warren before, it sort of makes me think about sort of N26 on the 26th, as they were in the early days. Sort of that was one where it sort of they used Wirecard as an end-to-end provider for banking, for issuing, for technology, for everything end-to-end. But one of the real sort of challenges they had really was to sort of embrace that branchless banking approach with BaFin German regulation, and unfortunately, Wirecard sort of would have loved to have outsourced to a specialist KYC provider, but at the time, sort of it was face-to-face verification or going through the German post office, and they ended up having to cobble together sort of a video identity service, sort of using a call center in Leipzig in Germany, which you know, I think at the time sort of it would have been so much quicker, so much easier, so much more cost-effective, and probably a better user experience if there were sort of specialist providers out there. But sometimes, I guess, when you're innovating, the specialists aren't there for you yet.
Yeah, absolutely.
I think it was good to see, though, in the report that the cost wasn't people aren't looking to outsource to make things cheaper. They're they're looking to outsource to to meet the requirements of regulation, or to scale themselves, or to get their product to market quicker, or simply to say, actually, Luke, Hugh, Warren, you're the experts, your companies are the experts in what you do, we're going to trust you and rely on you. It would have been quite disappointing if they'd all come back and said, oh, it's cheaper to outsource, because I think that's the wrong sort of message behind it. But it was really good to see that that it was driven by those sort of three key pillars, I guess. We've spent years working with partners, competitors, frenemies, whatever you want to call them, and initially a lot of our now very good supplier friendships that we have now, treated us with a sense of caution and worry, like we were going to come in and eat their dinner. I think there has been a real shift of approach that actually we don't need to keep it all behind closed doors. We don't need to do it all ourselves, and that has enabled fintechs to outsource. I think they always wanted to, but there was almost a feeling that they couldn't. They had to keep it all in house because that's what the retail banks or whatever do. They all do it in house, so we must do it in house because they've got multi-trillion-dollar businesses, therefore that's what we want, so we must work the same way. Whereas that adoption and acceptance of working with your peers, your colleagues, your competitors, your complementary service providers, let's be fair, the market's big enough for us all, so let's work together and make it better for the consumer, because if the consumer's having a better experience, we all stand to benefit.
Absolutely. And thinking about geographical expansion, Warren, how are those partnerships helping with that sort of scaling across border?
Yeah, I mean, if I put that into my world, regulation is different, and KYC requirements are different from country to country. If you look at some larger countries, they're different from state to state. Going back to what Luke just said now about BaFin and their requirements for the post-ident, as it in the world of KYC being widely adopted in the UK, still having to walk into a post office in Germany with a document or speak to somebody on a video and wave your passport felt quite old-fashioned. So for us, again, we don't position ourselves as the expert in any particular market. We work with the different experts, so we have suppliers who specialize in Germany and video-based identification. We have suppliers who specialize in the US and geolocation, and that's the challenges. I've spoken on a lot of betting and gaming panels about the desire for that industry to have a globally sort of recognized regulation, and is that ever going to happen? We kind of almost had it really when we were in the EU with a bit of passporting here and there and stuff like that, but still it wasn't unified regulation. It was the ability to operate under your regulations in other jurisdictions. So you ultimately you can't do it on your own. It goes back to what Hugh said time and time again. You can't do it all on your own, and you have to work with experts, because otherwise you're going to do something wrong deliberately or inadvertently, and that's going to end up causing you a lot. We've all seen the headlines of over the years of AML failings, or different regulatory breaches, or commercial naivety that has resulted in businesses struggling. So I think actually leveraging the power of a team, of a community, creating your own little ecosystem of organizations that you trust, that work and cover the different areas and the different complexities, is the only way to do it. I don't see a way of, even the big credit bureaus, the way they deal with it is they buy a company. They say, well, what do you do in that jurisdiction? Okay, yeah, all right, let's buy you. They don't try and do it themselves. So, but that's, just on a different scale. If we had the M&A pockets that those guys had, we'd all be on a beach somewhere. But I think, that expansion, dealing with new geographical challenges, even down to data sovereignty, in the EU, outside of the EU, I can't think of a US regulation that you were allowed to transfer data. It slipped my mind, and then you can't, and then everything is changing all the time, and that's just from a regulatory or geographical perspective. If you then put into fact all the criminals who are trying to beat the systems, then the systems have to keep up with the regulations and the changing criminal behaviour. It's an impossible challenge to do on your own, which is why we've chosen not to. We work with lots of subject matter experts, and I think that's got to be the way forwards.
Sure. Okay. And actually, we often refer to the compliance imperative, and I think with everything, certainly over the last 18 months, it's all been about sector resilience. And so I'd just like to sort of get your thoughts on how, that compliance imperative changes as a fintech grows.
Personally, my view, I don't think it does. I think you should act as though you are tier one from day one. If you build a system, sticky back plastic and pipe cleaners, to say, well, if it works in 6 months' time or 6 years' time, we'll rebuild. You never do. So you've almost got to understand where you're potentially going and build for success.
Yeah.
As the require, there's no difference in requirement on a business. It's just the scale of that requirement. You still have to do the same level of due diligence on a customer if you've got one customer or if you've got 100 million customers. It's just a scale. It's just a scale issue.
Sure.
Same with your whole, your cash reserves. It's just where you are on that scale. So I think for me, it's understanding it from day one, and I've certainly been there, and I'm sure others on the panel have. We've all made a lot of mistakes, on the way, and I certainly never built W2 to scale in the initial outsets. It was me and my colleague, and there was going to be two of us, and to coin a Dragon's Den phrase, it was going to be a lifestyle business, and we were going to drive a nice car, have a bit of Bupa cover, and 2 holidays a year in the Maldives. That was it. Never really imagined it was going to get to the scale it has. And it took us a long time. It took us a long time to deal with that. So I think the way to deal with those. Okay, you can't deal with the unknowns because you don't know what change is going to happen to regulation in the future, but you should always build and partner in a way that enables you to change. And if you do it all internally and restrict yourself to that, it really does stifle that opportunity for growth and change. So does that kind of answer the question?
It does perfectly. Any thoughts from you, Hugh, on that, or Luke, before we move on?
So I found myself nodding along, which is probably not surprising. So
at least it was nodding along and not nodding off.
No, definitely nodding along. I was thinking about the internationalization piece, and it was making me reflect on how we're operating as well. So again, in my space, this sort of open banking, open finance world, it is also really complex on a global stage. There's a huge fragmentation in all of the different standards that are emerging in different markets that the banks need to implement. It's one of the things we try and sort of help. We can translate to any standard to support banking in any market. And we've been very conscious about wanting to make sure that, again, we try and do one thing better than anyone else. And in doing so, we've kind of recognized where we need to partner and work far more effectively with others. So as Warren was saying, kind of you can't be an expert everywhere at all times. So one of the things we've been really conscious of is if we want to focus on building the best software in this space, we need to work with the right partners in different parts of the world to get it out there. And actually this creates an interesting interplay in this generalist versus specialist. So quite often we're partnering, we're setting out to be an enabler of other enablers within the banking world, and we're working with partners in different geographies. So we're working with a major banking technology player in Brazil, with a different kind of player in the Middle East, and that's helping us be part of a broader, slightly more generalist proposition, but work with partners who really understand the local situation. They have the relationships, they understand the kind of the operational needs in the market, and actually it allows us to be much more successful. And in the last year we've scaled our business massively in a way that we never could have done if we tried to do it all ourselves, but through picking and working with the right partners in these different parts of the world, we've been able to grow the number of banks and FIs using our software, as I say, multiple fold in the last year. And we never could have done that if we'd have tried to do it all ourselves. And I guess I'm not sure where I'm going with it, other than I think it is important to partner with someone who can help you with that international scaling if you've got the big ambitions. So know it in your market, but globally. But actually those businesses are also probably taking this exact same thought process around, what do I do myself, and where do I partner, because I can't do everything myself. And I think Warren, it sounds like you went through exactly the same route, but we're continually thinking through anything additional we need to do. There's the could we do it ourselves, but more importantly, should we do it ourselves? I think that's a really key point. How do we stay focused on doing the one thing better than anyone else and not getting distracted by all of the shiny things that are always there? So yeah, that conversation just made me reflect a little bit on our journey.
Great, thank you. So I want to go to a couple of questions that we've had. I'm going to ask the first one. So to you, Luke, first of all, when you start out, how would you recommend understanding the different partners you might need to work with to launch your card idea?
Yeah, I mean, it's always a tough one, because we sort of as spin sponsors, more one in particular, I guess we constantly have sort of, I guess, a stream of inquiries where people see products in the market and then are trying to sort of strip back to sort of how they actually get to it and everything else. And the reality is that there are various different routes that fintechs can take when starting out, and I guess a lot of it's sort of defined by budgets, a lot of it's defined by sort of what's really key to their sort of product and what sort of time frames are they working to. Some I guess companies will elect to sort of use an end-to-end provider to get some kind of MVP and know that they can sort of somehow deliver 80% of what they're looking to sort of achieve longer term by doing a bit of a plug and play white label, piggybacking on the existing infrastructure. So there's lots of I guess offerings in the market, sort of including I guess some big players such as Stripe that have come into the market with their sort of live in your own brand within a few weeks or whatever it is. So there are sort of, I guess, some low-hanging fruit to sort of get a very easy offering, and that would certainly sort of work well for some fintechs where they've got sort of, I guess, ancillary sort of visions and where their USPs sit and everything else. So that would certainly work very well, or work well to get an MVP to market. I guess one of the key things within this report, so we're trying to achieve with this report, is I guess understanding where other fintechs have sort of elected to do the slightly more expensive and longer, slower sort of, I guess, more involved process of contracting with lots of components of the value chain. I mean, on our side, I guess it's almost like an evolution that kind of make it sound like a hierarchy, but I don't mean it in a derogatory way, but you've kind of got plug and play and end-to-end white label. Then you've got sort of players who contract with a bin sponsor, an issuing processor, a card bureau, a KYC provider, open banking provider, and have a full grip of the value chain. I suppose just within that, you've got some issuing processing platforms that you maybe call processing plus, where the likes of GPS, they've done integrations with W2, they've done integrations with Currency Cloud, they've, I guess, brought together sort of some, I guess, fallbacks, but still offering their clients the possibility of selecting somebody completely different for, warrant for KYC or whatever they like. So yeah, so you've got the end-to-end plug and play, you've got sort of the program manager, as we term it, to contract with all the value chain. And then above that, sort of you've got sort of, I guess, where the likes of Revolut, Wise, and sort of Monzo and a number of other players have sort of taken the next step to actually become regulated themselves, become a principal member of the card scheme themselves, and even in some cases sort of build their own issuing processing capabilities, and I guess go against the grain of what we said in the report and the fact that they've brought in-house a lot of services externally. So to summarize, there's lots of different paths and lots of variations in between. I guess there's some good sort of data online. Sort of we've tried to publish some stuff that helps sort of guide some of the businesses we're speaking to. So we're always happy to guide people there. There's some good publications like Polymath, where they sort of describe the value chain, talk about the different routes. To get a truly agnostic view, it's probably good to use a consultant like Polymath or Phoenix or somebody like that who can really sort of evaluate what's going to be best for your business and consider all the different sort of components. But invariably, it is sometimes sort of more a question of taking a step back and focusing on what's the sort of core to the offering, really, that what do you want to sort of spend most of your time and effort doing, and can you kind of use the rest? And it actually sort of works out well for a lot of fintechs to maybe even try out sort of using a specialist to really get a true feel for what the limitations would be, because it's often been that as a bin sponsor, I've worked with a lot of program managers who have been on an end-to-end platform for a year, maybe 2 years, and then realized, actually, this is what I need from a provider, and this is the bit I need to own and control, and this is where I'd see limitations. And I guess on the geographical points, sort of maybe realized that if they own the value chain, they can sort of use a processing platform and have bin sponsors in multiple jurisdictions outside of Europe, and sort of fuel their international growth a little bit easier. So there isn't an answer, really. It's horses for courses. Probably my answer. Yeah. It depends. I should have just said that. Yeah.
Okay. So coming back to, you know, the specialist versus generalist, thinking about sector growth, thinking about, you know, how fintechs are fueling their growth, do you think it's specialist partners that are driving that investor interest, or is it a combination of the two? Maybe Hugh, you could share your thoughts on that one.
Yeah, I saw that question. It's an interesting one. So, my personal perspective, I think it plays a role, but actually, I think for the VC discussions, what you really need is a clear vision. What are we trying to achieve? What's the big problem we're trying to solve, or the big vision we're looking to deliver? Why we are different in our ability to execute against that. So kind of the core point of difference. Now that helps then drive a really informed strategy around how do you actually build your business? Which are the things, back to my original point, what are the things that I need to own because I want to do better than anyone else? Or again, build the right partnership because I want to do anything else. And which are the other bits that are really important, but are perhaps areas that I don't want to own and specialize in myself, or that are sufficiently complex that I need a real expert partner. I think having a good story there absolutely makes a business much more investable. So kind of the clear vision, but how are you actually going to deliver on that? Which are the bits that you should do yourself versus the bits that you shouldn't, because they are sufficiently complex or not core to that point of differentiation. I think having that good story is really important, and showing that you've thought about the breadth and understood where the complexity is. And there are certain areas, again, back to this generalist and specialist, there are certain, along the spectrum, there are certain areas where the complex is much more complex than other areas. So kind of understanding that. And actually that first question, I think there is a bit about just go out and talk to people, go and talk to some of the generalists who will tell you, here's everything you need to do and why we can do it all for you. But then break that down a bit. And they talked about these 5 areas, right? Let's go and understand what a specialist would say in that area. What's the difference? And then recognize actually, yeah, that's why this is a specialist area where I really need a specialist. I mean, it's just an example. One of our customers, Tide, I mean, they're a fantastic growth story in the SME banking space, got a really, really strong tech team. They made a decision really early on that they didn't want to try and do what the big banks have done and build all of their open banking APIs themselves. And it's really paid dividends. So we've been working with them for a while, but they're always sitting right at the top of the performance dashboard. So all of their SME customers that rely on the integrations into the accounting platforms and other things, it just works. And it would have been much more expensive, much more costly, and created a huge drag on their own developer resource to do it themselves. So that opportunity cost is really important. And again, that's one of the things that investors are looking for. Are you putting your resources in the right place? What's the opportunity cost of trying to do it all yourself? So I don't think it's the only answer, but I think it's part of it.
Yeah, that's interesting. So we're almost nearing the end of our session. So I just want to spend the next couple of minutes asking each of you in turn, what is the one piece of advice you would give a young fintech coming into the marketplace today? So let's start with Warren, to beg your pardon.
So I've been called worse. I think, it's clear from the report that, partnering with specialists, I think, the feedback was, 20% growth, and something like, 95 or maybe even higher percent of respondents said, they can move quicker working with specialists. But equally, there's a place for both. There is a place for both. So what's better for one will not necessarily be better for the other. So I think the one piece of advice I would say, the one sort of nugget really in there is understand your business, understand what you're trying to achieve, and find what is right for you. It might even be a hybrid model, some generalists and some specialists, but you have to know and understand what's going to be right for your business. Okay, Luke, your one piece of advice.
Yeah, I mean, I think kind of Hugh articulated it very well before. Really, it's that sort of, I guess, focusing on what problem you can fix and what's the core value, what are you actually taking to market. But adding to that, I suppose, sort of is being aware of what's happening in the market. Really, that you sort of in an ivory tower or tucked away in the back bedroom or whatever it is, devising this plan and sort of pitching something to investors, and investors can be seduced by whatever's on their agenda at the time, and they're not fortune tellers, right? So they're very bright people. I'm not taking anything away there, but they don't always get it right. So you sort of take away your sort of business plan, you've got your core vision, but it's always being ready to adapt to what's happening in the market and listening to what the market's telling you. Really, it's I mean, we always refer to Revolut as a success story because they're growing at such a phenomenal pace, but I don't want to sort of misquote them here, but sort of, I guess, sort of their proposition to the market early days was very much sort of, we're a travel product, we want to be best in market, sort of travel app for your currency needs, and then gradually the market started telling them that people were actually using, because it was multi-currency, sort of using their accounts for FX trading. So they sort of got a flavour for the market saying, well, actually, we want an FX trading platform for day traders as well. So that's kind of pulled them in that direction. The market started saying, well, I'm using my Revolut card, but not just when I'm traveling abroad. I want to use it as my main payment card when at home. So they sort of, I guess, quickly realized that there was the market pulling them towards sort of, I guess, being that mainstream sort of top of wallet banking app and sort of card and everything else, and the whole messaging and everything else has somehow sort of evolved. So I'm not sure, I really can't comment if it was on the roadmap sort of early days to say, well, this is how we'll sort of gradually become mainstream, but I very much get the impression, and there's a lot of other examples out there where sort of saying, okay, best in market, greatest UX, quick onboarding, everything that sort of was cool, sort of they took it to the market then told them, actually, there's more areas that we'd like to make this used for, and we want sort of crypto, and we want this, and we want, so that, I guess that's sort of where Hugh's advice is very, very strong, and I definitely sort of echo that. But I think just being receptive to market changes, sort of, and what sort of customers are telling you they want, really.
Yeah. And finally, Hugh.
I'll keep it super short. I think focus on that question of what should we do ourselves rather than what could we do ourselves. And whatever stage in the journey, from startup through scale up, whatever, that's always going to be a pertinent question. What's the quickest and best way to get to our end point? But it's that question, what should we do ourselves?
Okay. I'm afraid that's all we've got time for. I just want to say a huge thank you to all three of you, Luke, Hugh and Warren, for joining us today. I think we've had a really great discussion. If you haven't already looked at this report, you can go to moreon.com/specialist versus generalist to download the report. So many thanks to you all again for joining us today. Thank you to everyone who joined us online. We look forward to seeing you in person properly very soon, I hope. Thanks again.
Thanks, everyone.
Thanks, Dan.
Thanks all.
Bye.
Bye.